Hi traders, and welcome to my video on the Consolidation Breakout Indicator. In this video I'm going to show you how you can use this indicator to trade consolidation breakouts and capture moves like this one for around 400 pips. Okay, so this is just a general consolidation breakout indicator that I found online, which I have on my MT4 chart here. This is a pound-dollar 1 hour chart. Okay, I'm just going to let you know from the get-go you can apply this strategy without actually even needing this particular indicator. Okay, so watch on to find out how. It's a very simple strategy and I can assure you it will be worthwhile. So as I said, this is a GU pound-dollar 1 hour chart. The reason I'm trading the 1 hour chart is because I find it gives more reliable signals due to the fact that there's more price data included than say the 1 minute, 5 minute or 15 minute charts. I do also like to trade the 4 hour daily, weekly, monthly as well, because again, signals tend to be more reliable from my experience due to the fact that there's more price data included. Okay, so these lines here, the chart may look a mess, but I can assure you these lines are doing something. These are the consolidation lines, which can be configured in terms of size and color from the indicator settings. But essentially what we're looking for is a trend. Okay, in this instance, a downtrend. Okay, and then we're going to look for a consolidation, which is going to give us our signal to enter into the trend. So, without trying to clog things up too much, we are in a clear downtrend here. Okay, so we wait for consolidation from the consolidation indicator. And consolidation is when the indicator goes flat. Okay, because you can see here it drops down, price drops down, drops down, price drops down, drops down, price drops down, drops down, price drops down. When it's flat is when we look for consolidation, because this basically means after we know we're in a downwards trend, market's making these lower highs, so we're in a clear downwards trend. We're just going to wait for it to go flat, because this is going to be the time when we want to be on our toes and getting ready to pounce, basically entering into the trend, down in this instance, on a pullback. So it goes flat, which means there's been a pullback. Okay, the market's not going down anymore. Okay, and when that happens, we wait for price to break out of this area of consolidation, because when it's flat, this area here is the area of consolidation. Okay, these three lines, okay, are the opposite of these three lines: the yellow and the yellow, the blue and the blue, the silver and the silver. Okay, so provided on the pullback in the consolidation zone here, the line does not go above the silver, which is the shortest channel, low channel in this instance. Provided price doesn't go above this, we're in the consolidation zone between the silver and the yellow. Okay, so that's our consolidation zone, and you can see price stays in this consolidation zone, so it's acting as resistance. Okay, whereas the yellow is the support and it's consolidating. So what do? We just wait for a breakout of the yellow line there to the downside, because we know we're in a downwards trend, and that's the entry point there. Simple as that. And that way you can get into this trend at a favorable entry point. Almost 300 pips profit potential on this trade in the space of a few weeks. Actually, that is a week, less than a week's worth of trade in there. Okay, so just goes to show the higher chart time frames with a good solid strategy and sensible money management, you can capture good moves. Talking of money management, for this particular entry on this breakout, I would have put my stop loss above the high here, so around 20 pips. Okay, you can use the other channel if you want for your stop loss. It's just it could end up being a bit too wide. You know, if I like to cut losing trades short, because I know that if I've got a relatively tight stop loss, it may be 20 pips, you know, it may be this high, 30 pips. It just depends on where the high is. Okay, with a tight stop loss, if we do make a mistake with our trade and we cut our losing trade short, we can still be up overall when we capture moves like this. So what we don't do is we don't have a 20 pip stop loss, see price drop here 20 pips, get excited and take profit. Instead, I'd use a trailing stop. Okay, so I just move the stop loss above the highs all the way down, above the high of the price, that is, all the way down, and just try to maximize each trend we catch as much as possible. As soon as we see price start to turn around in the other direction or consolidate, like you see these big consolidation zones here, then I might look to manually exit. But that way, you know, we can maximize winning trades without a fixed take profit, but minimize losses by having a sensible stop loss. Okay. And you can have the best entry in the world. If your money management is poor, you know, the results will probably be poor as well. Okay. So this was the ideal entry in this particular downtrend using a consolidation breakout there. And again, the same thing happens almost immediately after we get that flat line. Okay, so we're in consolidation. You take a look at price, you can see it hasn't gone above the low silver line. It's consolidating, okay? And again, a breakout. So you can trade this breakout of that yellow line there in another good entry. Still the market's making these lower highs, so we're in the downtrend. Again, line goes flat, doesn't go above the silver, we're in a downtrend, consolidation, enter on the breakout. Simple entry. Now here, you know, we want to start thinking that, you know, we've already missed good opportunities. We should still be in any of these trades if we took them. It's not a terrible trade. We have our consolidation. You can trade a breakout of the consolidation. Again, the price did just go above the silver line. Hence, it's probably not the best trade in the world, but still nonetheless would have caught the end of this move down here. And that support actually becomes resistance over here. So we know it's a strongish level. Okay. And even down as far as here, consolidation, breakout below the yellow line here. And a possible entry, but you risk selling at the low then. Okay, we've already had this move down here, so you might not want to sell too low. Okay, so then when price turns back around, okay, goes up above these high channels, we're out of this trending zone. So we're going to see a proper consolidation like this. So we're not going to look to buy or sell unless you are range trading. So this indicator can be good if you're a range trader. You just look for a scenario like this when it's been flat for a sustained period of time. We know that we're in a range, and that way you can look to you know, buy at the low, sell at the high, whether you're using another indicator to help you pick off the range, or you could use this indicator when price goes in the low channel, buy, when it goes in the high channel, sell. Okay, so that's one way to you can use it, similar to trading reversals with Bollinger Bands. This indicator does remind me of Bollinger Bands. We just put some Bollinger Bands on the chart. Okay, well, it looks a complete mess now. But these Bollinger Bands really do the same thing. When price goes in the back in the band, it's the consolidation, and then when price breaks out below the band, it's the breakout, trading in direction of the trend. So that's something very similar. Okay. That what a messy chart that is. Imagine trying to trade that. Okay, so I'm basically just trying to say I don't think you necessarily need this indicator. You can just use Bollinger Bands, or you can just use, I mean, you don't even need, you could just draw a trend line. It's going down, and draw your support levels and just trade a breakout of the support. You can visually see a pullback. Okay, if we look for examples in an uptrend, got another downtrend here. Same principle, eh? Same principle. You've got your resistance here, price drops, line goes flat, so consolidation. Price does go above the silver line, but it's quite a strong downwards trend, and you can see a big breakout there, potential entry point there, or slightly above. Okay. And then after a big pullback like this one that's gone all the way to the other channel, we wouldn't be taking this trade because we're just in the consolidation zone again for you range traders. Okay. Upwards trend, same principle. So we have this big move upwards, we have a pullback. Quite a deep pullback, does go to the other channel, so this is a riskier trade, but potential breakout trade there. Okay, with these long consolidation areas, you know, it's debatable if we're trending or not. You want to ideally look for short consolidations and trends like this. See this trend here? Nice trend upwards. This one as well, nice trend upwards. So have a nice trend upwards. Then you have the pullback here. Okay. Trade a breakout there, resistance. Same happens here. trade a breakout there of resistance. Okay, pull back here, you can trade that resistance breakout there. Even as far up as here, you just don't want to end up buying too high. If you just zoom out, look at the overall picture, you know, all that trend's passed already, a majority of it. But there was ample opportunity as it was moving up here. You had these flat lines consolidation. Okay, your pullbacks, breakout entries. See that? Pullback. That's a big pullback, but as I said, you don't necessarily need the indicator to help show you these levels. You can see them yourself. You just know that once you know the market is trending upwards, okay, you can just visibly see a pullback, draw your resistance, see a pullback, draw your resistance, see a pullback, draw your resistance. You can do this all the way up. You don't need any indicator to help you do this. Okay, pullback, indicator, breakout. But I can appreciate some of you like fancy things on your charts, and in this instance, if you insist on using it, what I would do is I'd wait for the line to go flat, okay, to signal consolidation. Then look to trade a breakout in the direction of the trend, okay? And if there's been a deeper, if the consolidation's gone all the way back to the other side, you can always just wait for a breakout again. So a breakout here, then a pullback. This one only pulls back to that silver line, first silver line there. So it's a valid breakout entry on the continuation. Same here, ample opportunities to jump in on this trend. Again, for the stop loss on this one, stop loss below the lows. Let's just say you took this trade here, stop loss just below the low there, so around 20 pips. And then we can use a trailing stop below the low, 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 all the way up. Maximize this move as much as possible, you know, 300 plus pips in the space of a few weeks. Using this strategy, as soon as you see the market make these lower highs, okay, you might think about manually exiting if your trailing stop hasn't been taken out already. Again, keep an eye on price action. Once you see this consolidation like that, see that long consolidation there and then there. Okay, even as far back as here, the signs were ominous. You had this big, deeper pullback all the way to the other side, perhaps signaling first signal of trend reversal. Might have been looking to start taking part, if not all of the position. Okay, so that's basically a strategy using this consolidation breakout. As I said, if we just remove that indicator from the chart, you could have traded that just using price action. Okay, support and resistance and trend lines. So trend line, market's moving up, draw your resistance, 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 and just trading breakouts. Okay, and if we go to our downwards trend earlier, well, there was this one, you know, same principle, market making lower highs, downtrend, pullback, breakout, nice M pattern formation for extra confirmation there. This is quite a deep pullback, so a riskier trade, but nonetheless, there is some potential in that one. That's actually NFP, non-farms payroll, first Friday of the month candle, hence that big move down, but we could have used that momentum to hop in on this trade here. Okay, support come resistance. And this trend here that we were looking at, again, we don't need that indicator, do we? You can see that is a downwards trend. You wait for your ledges, your pullbacks, draw your ledge, enter on a breakout. Breakout, 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 ample opportunity. Okay. But the indicator, to be fair, if you actually are actively looking for consolidation zones to trade, perhaps you're using a range trading strategy, it can be great for that. Let's just say, for example, you want to trade low volatility times, like during the Asian session on a US dollar pair, which is not really affected that much, and you're just looking to scalp a few pips off the highs and the lows, then you might want the consolidation indicator to help you identify areas of consolidation. Okay, I prefer to trend with the trade. Trend with the trade? Trade with the trend. Okay, and maximize good moves when we catch them. That way we don't need to be right all the time, but we know when we are, we can make back any losses and then some more. As always, have good trading discipline. Okay, don't let negative emotions, fear, anger, and greed blind your trading decisions. Okay, and practice on a demo account. until you master your strategy. Thank you for watching. If you could like and subscribe, that would be great and really help the channel. And I hope to catch you on the next one. Take care.